Hello and welcome to the Cash Furnace. My name's Eric Downs, and together with my co-host Paul Kinzierski, we aim to become your go-to source for daily stock and crypto market news. Today's date is January 19th, 2021, and in today's podcast, we are going to be covering Netflix's blowout earning report. Paulie's going to cover Grayscale buying another 600 million in Bitcoin, and some new regulations for Bitcoin trading.
Let's do it.
So thank you for tuning in. If you like what you see and you want to keep the news coming, please make sure like, comment, subscribe, help us run this YouTube algorithm up. In the meantime, let's make some money. Paulie.
All right, buddy. Let's talk about Netflix with the absolutely epic rise that we saw today. That was unbelievable.
So I want to talk about three points. Two are about the earnings, and one was about a play I had. And I just want to share like the mechanics of the play. It's very interesting. I think it's interesting. Okay. So Netflix today had their earnings report for Q4 of 2020. Previously, Q3, they were kind of down in the dumps. They'd missed earnings. Basically, they had seen huge a subscriber decline. In Q4, they came back with 8.5 million new subscribers, and they hit an all-new-time high revenue high of $25 billion. Obviously, this all sounds really great, but the one big thing that really stood out to me was they noted that they're saying revenue is now sufficient to cover their day-to-day operations.
So they're finally profitable.
That's exactly it. Previous to this, they've been fueling the fire with debt cash, and now the revenue they're actually sustainable. This is a huge turning point for Netflix. This is a huge turning point for any company, but Netflix is one of the biggest companies, like most well-known companies in the market in our world, and they've been around for how long? And they haven't they've technically kept the gears turning with debt, and now they're sustainable. That's huge for investors, man. That's huge.
Yeah, and if you look at the chart today, so what we normally see, right, is we'll get this big hype up to the earnings report, and then we'll get the earnings report and a big sell-off.
Yep.
But what I think this was a catalyst of two things, and let me know if you're on the same kind of level as me. The first being, like you said, last earnings report disappointed, right? So I think this earnings report, a lot of people were iffy if whether or not Netflix was going to release a good one. So there wasn't that initial crazy ride up to the earnings report because people it wasn't a certainty, right?
Right. I agree.
Secondly, the fact that they're profitable, as soon as people see that, they're like, all right, this is the Amazon of streaming now, right? They finally have hit this point where now it's just going to be moneymaker.
Exactly. I wholeheartedly agree with you, man, for real. And, typically, I mean, there's no formula to earnings reports. And in fact, earnings reports, depending on how you play them, can be a make or break kind of bet. So I mean, I generally stay away from them because they can wreck you or send you sailing to the moon, and I don't care for the risk anymore.
Yeah.
But there are sometimes, like you said, Paulie, there are some times when you can sort of see what's happening, right? You can see a stock running up to earnings, and you can kind of tell, all right, it's a little toppy, and it's going to sell off. In fact, Netflix has very famously done this. I think they did this in their was it Q3 or was it Q2 earnings earlier last year? Massive, like insane run up to their earnings, and they plummeted like 100 points.
I believe that was Q3. That was the disappointing news.
That was the big
yeah.
So this one, now here's what I'm noticing. I mentioned this in our thread, is I'm noticing a lot of the FANGs behaving similarly right now. And it's not that Amazon is Netflix, is Apple. I'm not saying they're not the same thing, that they're the same thing, but I'm noticing that sort of group of stocks, or maybe it's just the large cap tech stocks or whatever you want to say, just sort of like kind of lackadaisically performing or underperforming. And
right, in comparison to the last year.
Right, exactly. And whenever that happens, whenever there isn't a bunch of pre-earnings report hype, I always have a better inkling that, all right, maybe we're in for a big surprise this time. Maybe if we're in for a pop because no one's playing it. So more than anything else, this is great. I had a play open for this. I'm going to share in a second. But next week we have Facebook, we have Apple, and we have Amazon, and maybe some more. I don't know. Those are the ones I care about. All of these companies all the stocks are performing the same way, and I kind of wonder if we're going to see a big surprise. You know, Amazon, huge Christmas sales. You know, Apple, huge Christmas sales. Whatever. Facebook, I don't know, huge Christmas ads. I have no idea.
Maybe.
But I'm going to be looking forward to next week, and I might actually dangle one out there, as they say, when I typically wouldn't, because I have a little bit more confidence this time around. Now, the last part I want to share about this is an interesting trade that I had going on well up to running up to earnings. Netflix at the end of last year, and actually, like I said, a lot of the things were sort of doing this slow consolidation, or I don't know which way this is going on your screen, but they're basically consolidating, which is generally a good sign for, you know, a good time to enter. You know, you're watching your volume, you're watching your momentum. And if you see the right moment, you could time a breakout really well and make some nice money. So I thought I timed a breakout pretty well, right? I thought I had it. I opened up a Netflix call spread. It was a February 19th, 540, 550 call spread. Now, if you don't know what that is, I don't know if we can necessarily cover that now, hopefully probably in a future episode. But suffice it to say, I used options to make a bullish bet on Netflix. Now, the thing about options is, if you've traded options, or if you've never traded options before, one of the things that any inexperienced or experienced options trader can tell you is the power of time decay. Basically, which means your position, your bet erodes in front of your eyes for every day that you're not right. And every single day for probably, I would say, about a month, I wasn't right. Maybe I'd get a little pop here and there. Oh, is this? No, it dies back down. No. And I can see my position eroding. Now, if this was a naked option, a single option, just a call option, that thing would have been in the toilet. I would have been so far past my loss threshold that I would have forced myself to close it. But I used a call spread, a vertical spread. So I bought a call and then I sold another call. Again, we won't get into the technicals, but what these two options do together is they sort of counterbalance their powers, right? So it means this one's not going to profit as much because this one's canceling it out a little bit. This one's not going to decay as much because this one's canceling the decay out a little bit. Okay. I'm very fortunate to have seen that, like, if I hadn't set up a spread, the decay would have been so pronounced that, again, I would have had to close it, but the spread actually kept me in the game just long enough. And then, you know, here we are. I think we were at like, you know, Netflix was at like around 504 or something like that, I believe, at the end of day. I was way off of my strikes, but I was like, you know what, here we go. You know, I'm in. My position's kind of down a little bit, but we got earnings and I'm feeling pretty good. And lo and behold, we blow up like 60 some points, 13%, blows past both my strikes. I'm going to wake up tomorrow, sell that thing as fast as I can and capture that cash.
Good, man.
The power of spreads to allow you to stay in the game and to give yourself time to be right. So I hope to cover that more in the future. But that's my segment on Netflix. I'm bullish on it. I love everything that's going on with it. I'm looking forward to the future.
Paul, and if you have well, I just want to add before we get to my bet. If you have high conviction in a trade and you play it smart, it is beneficial to have a strong hand. Right?
Yeah.
If you had a weak hand and you saw a month of time decay, a month of theta, you would have sold and you would have missed out. And to put the audience some perspective, me and Eric recently opened a Best Buy call, which we have put a restraining order on in the chat because I got I'm so salty about it. But basically, we had a high conviction trade, right? We knew this thing was going to pop, and a very similar situation where we had calls that were close, but we still had time, and that theta every day was just taken away and taken away and taken away. And Eric sold, and I held on for another 5-6 days, and I sold in 2 days later. It goes on one hell of an epic run, right?
Yeah.
And if I had conviction in the trade, I had time left.
As did I.
All I needed to do was keep that strong hand. Instead, these spaghetti fingers decided to sell, right? So, I mean, it's not always going to work out in your favor, but if you do your research right and you make the right spread, like you said, where it was holding the bleeding just enough where you felt okay keeping it. You could still make it out. Patience is key, man. Patience is key.
It really is.
It keeps you from being emotional too, especially with those spreads.
Yeah, because otherwise, without a spread, as we know, options prices are dramatic. They're drama queens, man, and they'll blow all over the place every day, and they'll take your heart right with it. Well, you could be a stone cold stoic trader, and and when you wake up and see negative 70% one morning, you're like, oh shit, So spreads, like Pauline said, they stop the bleeding. It's like triage, just like putting a bandage on. It kind of mutes the effects of a spread or of an option in a really nice way. But yeah, now we have we should we should make a little cash furnace blacklist. We got BlackBerry on there.
I love that idea, actually.
It's not alone. You remember the last one? We have two that we've done this on. We were both high conviction on the exact same thing. And we waited and we waited and we waited. It didn't come true. We sold just at the last minute before it blew. The last one was Rite Aid.
Yes.
And both times we were right.
That wasn't as close. I didn't have such shitty timing. I believe we closed that about a week or two early. But it did exactly what we thought. But
it ran even way more than BlackBerry. Oh my gosh. Yeah, I think it almost doubled after that. So
would have made a killing.
We would have made a killing. But you know what? You live and you learn. As we always say, that's the cost of tuition. We learned that lesson. Evidently, we had to learn it twice. But we know, and this is a message to all our listeners out there, if you're doing any time-based trading, any swing trading, anything like that, if you have high conviction, like Paulie said, just have a strong hand. You got to have diamond gloves on, because give yourself time to be right. Because if you don't, you'll end up like us. Yeah.
Or now we're going to have somebody, this is not financial advice. We're going to have somebody say, oh, I had such high conviction and I lost 100%.
Well, tough shit.
Okay. So moving on to crypto for the day. Let's bring it up here. So this is a major factor here. Grayscale adds another $600 million worth of Bitcoin to their purse in one day. And they're not the only major institutional investors that are buying back in right now. So if you recall, for our listeners, if you haven't seen the past episodes, what I've been saying is the last major time frame where Bitcoin was getting bought up in high amounts by institutions was right around the December timeframe, right around the $24,000 to $26,000 Bitcoin mark. The fact that institutions are buying back in this heavy again at these levels shows that they have high conviction that this thing's going to go up and go up soon. And it's funny you talked about consolidation today, right? And that's what made you buy into the Netflix trade, right? Because you've been seeing this consolidation and you see it in Facebook, in Amazon, and all the other big techs. This is exactly what Bitcoin's been doing for the past since the drop from 40 to 30K, right? We've
Right.
just been consolidating, shrinking down, volume still relatively high, and it's bouncing around. And chances are it's going to pop. It's been forming this absolutely massive pennant, right? Which is normally a sign of continuation. And I think we have probably a few days to a week before we see major moves start again to like the 48, 52K level.
Mm-hmm.
So hold on to your pants. Be patient, guys. It's coming. This bull run is not over. And I just want to point out, I keep saying there's a liquidity crisis when it comes to Bitcoin. Just today, Grayscale has added 18 times the total world Bitcoin mining rate. 18 times.
Wait, what does that mean?
So that means Bitcoin can only be mined at a certain rate. There is only a certain amount of miners right now who have the equipment, who have the graphics cards, who have the computer power necessary to mine Bitcoin profitably with kind of off-grid power, because it's such a power suck. I can't, in my market, create a mining rig and stick it in my living room, right? Because the electricity it costs to actually mine one Bitcoin would have me negative in financial.
Wow.
Okay. So a lot of these companies now, because there are Bitcoin conglomerate mining companies, what they do is they'll set up like a gigantic solar array, and they'll have a huge warehouse in the middle of somewhere sunny where it's all powered off grid. So that keeps their costs down. Or traditionally, China, when they have their rainy season, what they'll do is they get a shitload of power influx from their dams, right? Their hydroelectricity, and power will become ridiculously cheap. And that's actually the reason why there's such high concentration. One of the reasons why there's such high concentration of miners in China, because during the time of the year where they're letting those dams fly and electricity is so cheap, it becomes highly profitable to mine. All the miners in the world are at, I believe, a rate of 91 Bitcoin a day. I could be wrong, however. But Grayscale bought off exchanges 18 times that rate.
Good God.
$600 million worth. And this is happening every day by huge institutions. Grayscale is just the one that's publicizing this, right? There are other institutional firms that are publicizing that they're buying in, and for every one, there is at least 9 other ones who are not saying a damn thing that they're buying into Bitcoin right now. And so I believe we're going to get to a point where, and we've already seen this with exchanges, where exchanges are actually limiting how much Bitcoin at a time you could trade and buy. I believe we're going to get to a point where we actually have a Bitcoin liquidity crisis on exchanges, because all the institutions, when they're doing buying, they're just adding it into their wallets, man. They're not keeping it on exchanges. They're not trading it. This is a long-term buy, hold, save it. And that's one of the main reasons why I and many other people have been absolutely bullish on the price to Bitcoin. It's a finite amount, and more and more every single day, more than can possibly be mined, are getting bought up and taken out of circulation. So,
Paulie, can I ask you a dumb question?
Sure. No dumb questions.
So when Grayscale buys the $600 million of Bitcoin,
yes,
why does it not affect the price?
Well, you're talking market cap of trillions now, right?
Sure.
But I also believe a lot of this is over-the-counter trading, where they'll go directly to an exchange. They'll go directly to Coinbase and say, hey, we know you have this many in reserve. we're going to buy it for a premium of $2,000 over per Bitcoin straight from you. So they're not actually on an exchange. They're taking it from exchanges or private parties or whoever for these prices.
Okay. Makes sense.
Also, I believe not enough people realize this liquidity crisis. So it's not quite built into the price yet.
Beautiful. I mean,
but there will, yes, that's a good thing for everybody watching. It's a good thing for you. It's a good thing for me, right?
Yeah.
Load the fuck up, because once this does become common knowledge and people are like, oh shit, I can only trade a quarter of a Bitcoin a day now because there's nothing out here, right? Volume has decreased that much because there's nothing in circulation now. Everybody's buying and holding. That the price is just going to go up astronomically, because you're like, shit, I need to buy now. I need to buy a full Bitcoin as quickly as possible. Let me go $200 over the asking price, $300, $1,000.
And that's what drives the price up.
Yep. Supply and demand. It's
supply and demand.
The easiest economic principle there is out there, and it's the most powerful.
Yep. So if you have Bitcoin, enjoy the ride. If you don't,
yes,
good luck.
Get some.
Get some.
Get some.
Get some. Bitcoin.
All right.
Get some.
On to the next one. This actually Cointelegraph did quite a good 3-part piece on Biden's new SEC chair, Gary Gensler. We talked about this a couple other days,
right?
And I was very bullish for a crypto front. I believe he's the reason why we're going to have a US-backed coin this year. However, I wanted to bring up how much he wants to regulate crypto. Government wants their piece, man, and they don't want Bitcoin overtaking the US dollar, right?
Sure.
So this is one of the biggest things that I hate that is constantly quoted about Bitcoin, is that, oh, common criminals only use it as a shadow form to exchange for services that are technically illegal, right? And maybe in the beginning it was, right? There was this Silk Road that got turned down, or that got shut down. That was a unbelievable place where you would go and literally you could buy anything you wanted on there with Bitcoin. But now you look at the statistics on what Bitcoin transfers are used for, and the ratio is the same exact as regular fiat currency when it comes to illegal activities. Yet, every single legislator constantly hits on how cryptocurrency is used by criminals and we need to regulate it more and shut it down, right? And this is I'm convinced it's a fear-based smear campaign, essentially, to get their legislation in so they could control Bitcoin as much as they can and other cryptocurrencies as much as humanly possible. So Gary basically goes over, or this article basically goes over Gary's main points with how we need to regulate exchanges even more, how there's no safeguards for it, and how, I believe there is a quote in here, 20% of exchanges have no KYC protocols, right? Which is, for those of you that don't know, it's anti-money laundering laws. Basically, where criminals park their money, they want to make sure any exchange isn't funding illicit activity.
Got it.
But one of the side effects of this, right, has been a crackdown very recently when it comes to exchanges. And one of the bad things, right, at least for me, is I found out a couple of days ago I can no longer trade on leverage, which is the main way I make 95% of my gains when it comes to the crypto market, right? Now, what I am going to be forced to do is either A, just do the traditional buy and sell large amounts of crypto, or I'm going to have to go to the futures markets and play with the real big boys, which absolutely terrifies me. But it's just unbelievably frustrating, right? Because there is no, if you are a US citizen, you can't trade on leverage anymore. Period. I could have $5 million in a spot account. I can't trade it.
Wow.
Yeah. And this is just the beginning. I think things are going to restrict a lot more as this price gets astronomical and more people buy in, right? Because again, government is going to get worried about all the power essentially that cryptocurrencies are getting. And I don't know. It just makes me really nervous. And also I'm pissed off because this is like the way I make most of my money. So, but I wanted to bring it up. I wanted to say basically that don't be fooled by fear campaigns. Look into the actual numbers. Do your own research. Don't just see, oh, Bitcoin is for criminals and funds illicit activities, because it's just not the case, plain and simple.
It's it's just like advertising. It's just like advertising. Whenever you see an advertisement that's thought-provoking or fear-inducing or something along those lines, you have to remember that someone's on the other side of that ad, someone's on the other side of that campaign, that message. There's someone on the other end who's benefiting by you absorbing this message. And so you have to always think about whenever you receive a message like that, again, you're seeing whether it's an advertisement or smear campaign, like Paulie's saying, like you have to just think about who's benefiting from me seeing this and who's benefiting from me feeling this way. Take that into account, right? Because that's why the message exists. That's why you're seeing it. It's being shown to you because that person wants you to feel that way, because they're going to benefit if you feel that way. So it's kind of a bigger message, but
no, you're absolutely right. It makes me wonder, right? Because obviously 2020, we don't get much into politics on this podcast, but it's been very divisive. I don't think anyone can argue that. Not just 2020, just the past 5 years has been very divisive. And it makes me wonder, do you think it would be interesting to see if there was a highly divided, like two classes of who wants the monetary system to go where? That would be crazy.
Yeah. That's all I can say, man. That would be crazy. I don't even know where to begin with that. Yeah, that's a wild thought.
Like Bitcoiners and no coiners.
I know, man.
You know?
That's like
that's a whole other.
We might have to do a special where we
that would be cool.
That for a minute, because that's an interesting concept, honestly. Wow, if the society was divided over the currency. Okay, Paulie. I think that's the best place actually for us to leave off, because
I would agree.
We covered a lot of ground today. Our listeners, chew on that for a minute, speculate into the future. And if you think if you have any speculation, if that spurs a thought and you want to share what you think a currency-based divided country in the future would look like, you know how you should do it? In the comment below, baby. Like, comment, subscribe, and share. You guys know the ritual, not the ritual. You guys know the drill.
Thank you guys for tuning in, man. If you like what you see, you want to keep the news coming, make sure to do all three things that Eric just said. Help us run up that YouTube algorithm, and let's make some money, boys and girls.
Let's do it. Cash Furnace out.
Cash Furnace out.